Today we're going to be talking about how to spot the remaining liquidity in an intraday basis price action. So we're looking at Euro USD August 19th. I want to go over the day and actually explain you the way how you can easily predict or at least expect price to not take this Asia low. And you can actually see why there's no liquidity inside this Asia low. Okay? So let's go through the basics a little bit first. Like I always say, every single trader uses structure to base their complete confirmation to enter, right? Doesn't matter if it's a breakout trader, a break-in retest, trend line, supported resistance, whatever. They always see a new structural high, or a structural low as a confirmation. So if we see this equal low, support, resistance, call it whatever you want, for them to confirm that this is respected, they require two things. First of all, they need a trend line or support and resistance or whatever. Let's say these equal lows. They need it to be touched multiple times. Some of them uses a zone, but for the sake of this explanation and exercise, we're gonna just put a line, right? They want to have at least a second touch, obviously, to start that support line. But then the third one or the fourth and fifth, whatever, they need to have a structural high to confirm their entry point, right? That's exactly how they would enter, right? They would target then another structural point higher. That's the kind of risk reward they use. That's the way they trade, and they would put their stop loss below this point here, right? And if you look at all the retail strategies, they actually always use the same technique. Remember, this is how I learned. This is how everybody learned. We have higher highs and higher lows, right? This is exactly how they learn the new traders, right? Then you would have higher low, right? Okay, so they see structure as very relevant. So a lot of you guys already know what Asia session is. If you don't know, we will have videos about it. So coming out of Asia, we can clearly see that we have what we call buy side liquidity. Why? Pretty straightforward. We have new structures created to the upside. Okay, let me just change that color so it's easier for you guys to see. Okay, so we all know that they're looking to buy, right? But now our goal is to identify where their entry points are. Interesting, right? So we would have this point here that a lot of people would think that this is relevant, but for me, everything that happens in at least a minimum the first hour of Asia is completely irrelevant. Because if some of you guys already know and trade Asia or are awake during Asia, this is probably like completely impossible to trade in. It's the spread hours, the turnover for the day, the spreads goes to like 60, and this is all the wicks you see here. So everything starting in the beginning of Asia is completely irrelevant. For me, I look at relevantly stuff in the middle of Asia, right? So if we think that way, we would see that the first real structural break to the upside would be this, right? If this would be a structural break to the upside, we could mark this point as being relevant as a liquidity point, right? And we can even see we have little equal lows here, right? Equal lows, stop loss is why? Simple. It made a new high. Now, a lot of people would say, oh yeah, but we have trend line here. It's important to not go too much into details because at the second you jump into those lower stuff, small buildups and stuff like that, you start by over refining and you lose sight of the relevance. Okay? So this is really important for you to actually see the market as how retail traders see it. And when I say retail trader, I'm not trying to be irrespectful to the retail world because I'm even a retail. I'm just saying that the masses, the people, they all trade the same way, right? So our goal is to identify how they enter and where would be their stop losses. So as we can see, price pushes higher again, right? Breaks Asia. So breaking Asia is actually a strategy. Traders use the breakout of Asia high or breakout of Asia low as an entry point. So we would have this point that goes higher, right? And at each and every single inducement of Asia, what I always do is look to the left. What do we have to the left? All right, so we have this point here. I'm still in M5, I'm not switching. So we have an inducement of previous day, right? A couple of days. All right. So now a lot of people, again, would want to just see this as a mitigation point because a lot of people think they understand how liquidity work. They see an inducement, they try to enter. But we just explained that this is a breakout zone here, also here, and now it's trying to retest this zone here. You know the breakout retest traders, how they trade. Here we go, like this. They wait for a break, they retest the zone, and they enter like this, right? Whatever way they enter, like this, okay? So we can see price actually comes back, retests this Asia high, and then goes higher. We can also see if we zoom out, this isn't over refinement, it's actually zooming out, stretching the chart. We can see that we have structural point here, right? That made a new high. It's relevant because it made a new high. It broke this zone here. And this is the first structural break, okay? Blah, 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 blah. That closed below, right? So they see this as a break of structure, right? So that's why we call it false break of structure. And this is why this automatically becomes a smart money trap. Even if we didn't have this point here, right? Imagine this wasn't there. Oops, sorry. We would still have this retest zone to look for. Now we do have equal lows being built also here. But the problem is, what I don't like about it is that price didn't close above this high, but it did in here, right? Clear engulfing candles closing higher. So these ones, these equal lows, are kind of relevant because of this, right? So now we identify more liquidity here. We can even see here because of that Asia break, right? Now, what can we also spot in here that is interesting? We can see that we have also a little kind of a trend line building, but as you can see, is it really relevant to mark this? Because remember, trend line 1, 2, 3 touches, they wait for structural break. Here they wait for structural break. The first one is impossible to catch. So this is even more adding even more confluences that there is no stop losses here. Why? Because like I explained, this is completely ghost. It doesn't exist. So this candle hasn't break anything because this actually doesn't exist in my book because nobody looks at this because it's the spread hours. And we also have the beginning of that trend line here that this is the first touch, right? This zone is the first touch. So this is even more adding confluence that there's nothing here to take. And when I say nothing here to take, doesn't mean that this structural leg hasn't done a new high with this previous daily high. I'm actually explaining that for the sake of the example, we're trying to spot important liquidity, not to spot if there's liquidity there. Okay, important means that price will be attracted to this zone. I hope I'm not losing losing you guys, but it's really important to focus. So we see that this zone here, we confirmed it's irrelevant. Why? We have those equal lows breaking higher. Boom. Also, second touch of that trend line. Boom. Now we have this break of Asia high here, also inducing previous daily high, right? Relevant liquidity, right? Pushing higher. Coming back, retesting the zone. Boom, 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 breaking higher. Again, equal lows confirmed. Now, what happens here? Price closes below, right? So this becomes the same thing we saw here, a false break of structure. Let's do the structure again together, right? Right? Let's do just the legs so you guys can understand. Look how it closed below. And I just went and explained with the structural legs, not going to the internal structure. And structural legs are like if you would use the line bars. This is important to see that you're actually seeing the market as without any noise. So if this is a structural break, traders would want to short from here, right? So this could become, for us, our potential SMT. So if there's an SMT, there is liquidity. And I completely forgot to put this stop loss here. I'm really sorry. Okay. I completely forgot. This is my mistake. Sorry. Now, what happens also is people are entering here, right? Price pushes lower. They see that there's a switch in trend here. So there's also stop loss here. Okay. So now let's continue. Price pushes lower, comes back and retests this zone. Remember, the break and retest traders, they're retesting this zone, and now price pushes lower also. So if price pushes lower also, there is stop loss here. Now, this is where things get tricky. So actually, I prefer, when I look at this here, I prefer this one because I saw it on the line candle. Yeah, this one is better. This candle, let's ignore the wick. So this one is the real structural break. This is better. So let's pause for a minute and see where's the liquidity being taken, okay? So we can see here, price pushes higher. This is intact. This is intact. Now we have the stop loss of this SL, of this SMT. This one got clearly induced, right? We can see it. So let's go and take a little X and put it above, right? Like such. Now, there's a stop loss here, still intact because of that structural break. Now we have a potential SMT that we already know got clearly smoked, but we have stop losses here. Now price pushes lower. Now something happens really important here. We're starting to take out the buy side liquidity. So the only remaining one is this one here. And we already confirmed that there's no stop losses at Asia low because of those obvious reasons. So now my question to you, until we go check out for the entry and for the trade I took here, I want you to tell me, think for a second, why was price not inducing this zone here? Think for a minute. I'll take a sip. What is one thing you do when price pushes in your favor, right? Let's go together and check. Example, you have these equal highs, price induces, come back, and then you take a short. Let's say you take a short like this, right? The kind of trade I like to take. What is one thing every single trader has in common to protect our capital? Break even. Every single trader, even the algo, even the indicator, the EAs, whatever, every single trader that has a little brain cell actually moves their stop losses to break even. So if a trader, because of that juicy mistake I made here with that wick, if a trader looks at these equal lows or an EA, a robot, and price pushes with speed, with intentions, clearly, and enters here, right? This is his entry point. When price is so high and actually takes the previous daily high, and he's just trying to go to the moon with this trade, right? He could spot and take something to the left, whatever. He's looking for a buy bias, whatever. Okay. If he doesn't TP at previous daily high, what happens? And this is important to note. This is hypothetically something we observed in the market with thousands of hours of experience. We don't have access to the liquidity book. We don't know where the open entries are. I'm not a broker. I'm not a market maker. I don't work for the Fed. I don't know where the entry points remaining are. But hypothetically, look how perfectly price comes and takes out these positions at break even. This is really important to understand. Sorry, this video is getting a little bit too long. I hope you guys are enjoying it. Liquidity is not only where the stop losses are. If a position is taken at break even, they are releasing this liquidity to the market. Because remember, the market is a zero-sum game. So for someone to lose $10, it's either someone wins $10 or 10 people wins $1, right? So if he enters in a position, let's say with a 50 lot, so this, you can understand that this is $500 per lot. So this is a lot of edge for this position, a lot of leverage. So they're releasing, because a lot of people are entering here, they're releasing this position in the market, right? Now, with this current skill, you could say, okay, so if there's no more liquidity in the market, we actually induced with speed here. And now we have kind of our little internal break of structure here, because this is an internal break of structure because there's no structural point. The relevant break of structure would be here. That would be an internal structure. And they come back and they mitigate this imbalance POI here that also took in liquidity. And this is why you can see that this stop loss is also taken, even though because they just moved their position to break even. So the stop loss isn't here anymore. Now, here. This is real mastery, understanding where the remaining liquidity is. It comes with experience, it comes with practice. So really try to focus. I'm almost done. And now you would say, okay, but then Joe, if this liquidity is taken, can I do this and go target the remaining liquidity? This one, this one, this one. You are right. But in this case, price just came back and actually created another false break of structure. How? Let's see it, right? Boom, 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 boom. Fails to make a new low with speed. Structural break. So people would see this as an entry point now. So this becomes an SMT. So they are inducing early sellers. That's how we call it, early sellers. And you can see perfectly how this price came and reacted to this perfect SMT to go higher and with speed to go lower. And now again, you would ask me, okay, but how can we know if they're inducing early sellers? That's an excellent question. Your goal is not to predict if they will do it. Your goal, you can never predict what the market will do, but you can always control your trade management. So if you would enter this position here, let's say, here, okay, this zone here, right, stop loss below with the spread. At some point, you would have to at least move your position to break even. If you don't, I'm sorry for you, but this isn't the way I trade. I always move my position to break even, and I'll actually explain you in other videos how I do it. But in this case, they came back and they induced this remaining stop loss, and they came back, mitigated this trap, woof, came back, boom. So if we would enter this trade, we would either take partials here or close to break even. So this trade would be saved. And now they also push price here. You can see here, push price here. So there is liquidity above this point here. There's also more liquidity because of that SMT here. And look how they just, and there's no liquidity here. Why? Because this push didn't break anything else than this internal push here. You can say that there is liquidity because of this structural leg here. If you want, we can mark it here, no problem. And you can see, and boom, boom, boom. Look how they perfectly come and actually induces this, and this is where I took my position, right? I took it a little bit more aggressive, but it's all good. For me, I enjoy these mini trades like this, right? But for the sake of the example, you take the whole zone, the whole zone in M1, okay? And you target the liquidity perfectly here. That's a 127 clearly. So now let's go complete and put our X's. And this is how you can see where is the remaining liquidity. Now what they did, rinse and repeat, they are creating more liquidity to the buy side. And they're pushing more liquidity. So they're just creating more. Let me just put this here. That's my OCD. That one's thing aligned. Sorry. And you can see the remaining liquidity is here. and there's nothing here. So this is why it's important that a lot of people see these intentions to the upside. Okay, we have buy side liquidity being built. Now we have inducement of previous day high. Now we have a POI, and people come and boom, they just pull in the trigger, take a stop loss, or if they don't take a stop loss, they manage to enter whatever, and they just, example, they didn't spot the SMT here. They just target the freaking fence and then don't understand the reasons why their TP is not hit. It's not about having Asia session is just a guideline, a compass to understand your start of the day. You understand the intentions of the market here. And yes, there is simple ways of explaining it, like people like to explain it. Oh, we have Asia midline that mitigated this zone to go higher. But that's not the way the market works. Try to push and explain every single reasons why price hasn't went below this zone. If it would be only Asia midline mitigation of M15 or H1, whatever POI there is here, H15 or maybe H1, I don't know, whatever, that's not the reason. I clearly stated that the only factor remaining for us to go lower here would be this zone here, but this is clearly explained that liquidity has been close to break even. The position has been released. And you can see this on and on and on in the market. You will understand so much time price does this. You can see here, price pushes here, right? These traders trade with like literally 2 pips break even. They take a trade like this with, and they cover the zone, the zone here, the whatever they call it, and they just move to break even so fast. And look how they come back and take them out and continue. It's always like that. So I hope this helps you understanding the reasons why. And we can see here we have again, like I said, a clean trend line. 1, 2, 3 touches. Why in this case, even though we had that previous day inducement that has kind of a decent number of liquidity, you understand the reason why price wasn't attracted to this Asia low or this zone here. So let me repeat myself. It's not about understanding where the liquidity is. It's also understanding which liquidity is remaining and also understanding where retail trader enter. Understand the entry, you understand the liquidity. Hope you guys enjoyed it. See you in the next video.